All right, David, welcome back to Benzinga's pre-market prep. How you doing this morning?
Good. Thanks for having me, guys. How are you?
Good. Well, we're back in the thick of it when it comes to earnings season. Of course, already had some big companies report this week, but this afternoon you've got Tesla, Visa, Enphase Energy, and more. Not to mention the rest of this week, we're going to see hear from Meta, Microsoft, Google. What's been top of mind for you? I mean, are you expecting this to be a strong earnings cycle?
Mainly, but what's kind of on my mind is just if the market's in the mood for it, right? I always like to say where a stock is pre the print may be as important as the print itself. And I don't think anything's pulled back so enormously that I'm super bullish into most of these prints. So I'm sure we'll go through them case by case, but a lot of them, I don't expect bad prints. I expect pretty good ones, but I don't know if the stocks are going to work. A lot like we just saw with the financials. If you remember, most of them actually traded down, and now I know back up. But outside of Goldman, it wasn't exactly a glorious response to most earnings reports. So I'm kind of thinking we have a little bit more of the same, because all of a sudden valuation matters now that maybe we're not going to have 6 rate cuts or 3 rate cuts or 2 rate cuts. So that's where my head's at on earnings season. Case by case, there's a few I'm bullish on, most not.
So you think the bar might just be set a little bit too high for a lot of these companies based on where they're trading heading into the report? I think,
tech-wise, absolutely.
Yeah, okay. So let's talk about the overall market real quick. I mean, we've been in this downturn, and then, yesterday was basically the first relief day we've gotten in a couple weeks. Do you think yesterday was kind of, somewhat of a dead cat bounce, or do you think maybe it could be the start of a bottom new rally? How did you interpret yesterday's price action?
So here's how I interpret it and how I manage my money with it. About 3 weeks ago, I was really cautious, and I started to say risk reward doesn't add up on almost anything. It didn't matter if we were talking biotech, even small cap. I know everyone's wanted IWM to work for forever, but given the environment, bottom line, given the hot numbers we kept getting, and given the fact that our Fed chairman said you're not getting a bunch of rate cuts, I thought we might actually break. And I wasn't, no drama, no calling for tops and bear markets, but very little to buy. And there'd be a few Q trades here and there. But overall, I was kind of looking like, oh my God, I might be missing some upside for the first time in about a year. And then we finally started to break, and I cut down the size of my positions. I had way more shorts on. I was short the Qs quite a few times over the past 2 weeks. And it was about Thursday. And by the way, all I did for about the last 2 or 3 weeks was, my playbook was really simple. Less is more, few positions. Every time they take NVIDIA down and it looks like it's crashing, I'm a buyer, because they're always going to go to the best first. And I'm not going to worry about Micron. I'm not going to worry about Dell. I'm not going to worry about Broadcom, but I will buy NVIDIA every time they break it. And I had several trades for like 2 weeks where I'd make 40 or 50. And by the way, not drink the Kool-Aid. So I was a trader, not an investor for the past 2 weeks. Make a long story short, started buying the Qs last Thursday and Friday, specifically Friday. I'd say my average wasn't the bottom, but like 415, 416s, and said, I anticipate a rally on Monday or Tuesday, pre-earnings, because earnings, I don't want to be long too many things, but I think we'll get a Q'd oversold rally. Q's trading down to about 29 RSI. Is that so ugly you have to be long everything? No, but it's as ugly as we've seen in 6 months. And then yesterday I got flat and said, Q trade, right? And on top of it, Friday, everyone thought I was crazy. I got very aggressive NVIDIA, 800, and then my 2 big spots were 775 and 762. As of this morning at 807, I'm not flat, but I have, almost none. And that I am 90% a trader up here. There's very little to invest in except financials, some industrials. We had a Q trade in Home Depot. And I'm playing the market as a trader till we get a greater pullback.
David, how do you control the risk on something like NVIDIA? And I've been NVIDIA for a long time, and I trade NVIDIA as well. Just on a candle like Friday, it spooks me a bit. And I've still got, and maybe, I shouldn't have that in my head all the time, but I was saying on Friday, don't catch the falling knife. I mean, what you were doing was actually catching the falling knife. What made you, and it worked, what made you confident enough that this knife was to be caught?
So it's funny because, of course, I had a few people. Anyone who's been around me for 30 years is like, oh, this is what he's good at. But there are other people like, you're an idiot, right? You're buying NVIDIA when it's down 60, 70. You have no way to quantify risk. And the way I look at it is real simple. There are two things you can do. First off, you can manage your size, right? And you can use levers. And I didn't say like once we broke 800, I didn't say, 890. I said 775 next. That's really realistic. And once you break 775, I saw 740 next. That's really realistic. So it's first not assuming you're going to catch the bottom, meaning manage your size. And then it works. I go to best in breed if the news has not changed, right? If there is no difference in the news flow, and it is the one that's being taken down with everything else, I find you can quantify your risk simply because if the market's not going to zero, if we are not having a blown crash, who do they buy first? So when people ask me, do you buy Micron at 113, 110, 117? I said, no interest. Are you interested in Dell? No interest. Broadcom. Oh, guys, I lost you. Sorry. No interest. But with NVIDIA, I had interest. And I simply do it by managing my size. And then
scaling in.
Yeah. And by the way, no BS. Every time it rallies 10, 15, we're trimming right away. So
David, I got a quick question.
Yeah.
I got a quick question for you. You talked about, and Dennis makes a very good point about, managing risk here. And you talked about your position in the triple Qs here at the 416 to 418 area. So obviously you were scaling in, you were averaging down, which, is something that
I want to correct you. I don't average down. What I do, and it's not that you're wrong, you don't know me, right? Is I plan out, this is where I'm going to enter, and I'm going to enter in halves or thirds. And if I'm wrong, I'm getting out. But I'm not averaging down. I'm actually averaging in.
So you bought the 416 and 417s or 418s on the way up? Because what I'm trying to ask, because I see this thing went to 413.07 last Friday.
Absolutely.
So if I'm long at 417, 418, you're risking 5 points on the downside. I'm just trying to figure out your strategy on the entry. So
real direct. 415, 416, I'm looking for a trade to 420, 422, and I'm out. I got flat yesterday at 421.
I think what David's doing correctly.
But follow me. Yep. This is not catching falling knives, guys. No one's looking for, this is where you get long size of the Qs. What I simply said is everyone is bearish. It's a Friday into the weekend. No one's going to be risk on. I anticipate we're going to close on lows. And when we do, I take a stab at it. If I'm wrong and we open up at 410, no one that follows me nor myself is positioned to blow up. But I am positioned to catch a trade because I am a trader right now, not an investor.
So if that went down to 410, you'd say, David, just for the risk portion, if that went down to 410, then you'd say, okay, this isn't working, and you take the loss and move on.
I would tell someone we have potential to see the 200-day at 396. Me, myself, I'd probably be really direct. At 27, 26 RSI, I manage real money. I'm down 4 points all the time to make 6 or 7 points and would live. Most people that run money with me do the same. Now, I get it. If someone's managing 100, 200 grand, should they risk losing 4 points in the Qs to make 4 points in the Qs? No. Why go through that risk? But I wasn't taking any size, but I took a very responsible trade, in my opinion, based on size. It worked. This is not like a new thing for me. This is how I trade in an environment that I think is not investable.
It's great to see, there's just different traders with different styles. And obviously you've been in the business a long time, David, so it's worked for you very well, and you've identified, and I think what I really like about
these videos. Can I say one thing? I really think this will quantify. Sure. I didn't buy SMCI, nor was I interested. Most people, we were shorting it at 800, even down 100, right? I didn't step into MU at 115. I didn't step into IWM Friday. So what we're doing is going best in breed or where the money's going to flow into a bounce. This is not some game of knife catching. I don't play that. It puts you out of business. Just want to make that clear.
Yeah, and that's the point that I was actually going to make for you, is that you were picking the leaders of the group. You're picking where the money is likely to go into first. And that's what I love about that. So, so maybe there is a play, and I'm always learning as well. I'm in the business 25 years, been a very successful trader for a long time. And I love learning from other traders and styles. And I think you're making a good point, is that when you are coming into, a market full of weakness here, pick the leadership, pick the stocks that the money managers are going to come into first, because there's so many money managers, David, to your point, that have just missed the NVIDIA run. And they're all hungry, like, please come in, please come in. So it's very, likely that that's going to be the first one that actually shows the strength and shows the life. And so identifying that helps you obviously, make this trade, and it bounces first, to your point. So I think that's maybe what you got to do, is if you're buying into weakness, at least buy into the stocks that are likely going to bounce back the fastest.
Joel wasn't being tough. He was asking pertinent questions. And Joel, this might also help you with how we trade. So Thursday, before the breakdown on Friday, I also remember that pivot on NVIDIA that was 823. It had broken down, came right into it, 825. I was a buyer there. I also didn't try and get smart and think I caught the bottom. I got out that day at 853, flat. Now, the way I look at trading, and I'm sure you guys as well, you're managing money, right? It's kind of all one trade when it's the same week. So when I'm going back in on Friday, and the same people that are going back in with me, they actually caught 25, 30 points. Well, we've done that about, 10 times in the past 2 months. So it's not one trade that changes people's lives. I'm going to be wrong, but also the very same people that are buying, I'd say I didn't catch the bottom. NVIDIA, my blended average cost was probably closer to 775, 78, right? I mean, it worked out, but it wasn't like I got the bottom. But I also had made 100 points. There was a point like a couple weeks ago where we literally bought it at 850 and 2 weeks later it was 950. So I don't pretend it's like one trade makes or breaks you. We all know you're going to be wrong a percentage of the time. It just so happens if you stick with the best in breed and know where the money's going to flow, more often than not, you'll be right. And then if you bet against it, more often than not, all the people trying to catch the top, they'll be wrong. And when they're finally right, they'll just simply be making their money back short.
David, we've got this QR code up on the screen for a webinar that you have this afternoon. What can viewers expect to gain from this webinar if they go hop in here and join it?
Sure, exactly what we're talking about now. So I have been a person that's basically said directly for the last 3 weeks, don't have FOMO. Don't worry about the market. Don't worry about what everyone else is doing. Size down, take your positions down. Let's have more shorts on. Let's not just chase the market and be excited. And let's find shorts like Adobe, which work for us, and Shopify and a million others. And let's be money managers. Let's not be dopes who just have to be in this hot market because it's going higher and higher. And then let's worry about making money. So when opportunities come, don't worry about having 10 of them. Worry about having 3 of them, be sized right, making them work, like NVIDIA, like the Qs, like JPM last week. I was saying it's got to be bought under 180, like Home Depot, which we bought last week, Thursday, Friday, had a cute little 7-point rally, and not really have to worry about the market, but worry about our position. It's really how to position and manage money, take advantage of volatility, and kind of, no one's better than the market, but you don't have to be ruled by the market. There are times to be a risk on, times to be risk off. And I deem us more money managers than traders that are like, oh, the market's down, there's nothing to do. Well, when there's volatility, there's tons of things to do. And we're going to chat a lot about that.
All right, awesome. Well, again, that link is in the description, or you can hit the QR code. I'll make sure to drop that link in the chat real quick as well. David, thanks for hopping back on Pre-Market Prep. Always fun to get you T3 guys on the show. Always taking a look at the charts and whatnot.
Appreciate it, guys.
Yeah, have a great rest of your day, David.
Thanks, David.